At P2 Gold, we're focused on advancing our GABS project in Nevada to production. We completed a preliminary economic assessment in October of last year, and we're currently in feasibility. So this afternoon, I'm going to do a quick summary of GABS, run you through our PEA, and then talk about what we're planning to do with our feasibility study. So, like everyone else, I will be making forward-looking statements through this presentation. So, I'll just jump along because this is a shortened version. I got 10 minutes. So GABS is located in west central Nevada. We feel Nevada is pretty much the best jurisdiction to be in the world. We can drive on pavement from Reno. It's about a 2-hour drive. We have a property, there we go. We have a paved road, 361, running right through the property. We have water on the property, power right up to our border. And we've got a great resource, roughly 3.5 million ounces gold equivalent, and that's made up of 2 million ounces of gold and roughly just under 900 million pounds of copper, and it's growing. So here's our PEA economics from last October. You can see the numbers have moved a lot on the spot case. I ran spot numbers today. Our internal rate of return's 112%. Our NPV 5 is 3.5 billion, and our NPV 15 is 1.6 billion. We currently have a market cap of around 150 million, so we're trading 0.1 of our NPV 15 at spot prices, so lots of room to grow. This is our mining. What we've done, we've got a 14-year mine life. First 5 years, we're running 9 million tons a year on a heap leach operation. When we're in feasibility, we're going to look at increasing that. It can be 10, 11, maybe 12 million tons a year, just so we can up our production rate. Here's our years 6 through 14.2, running 4 million tons a year on the heap, 5 million tons per year on a heap leach, on a mill. In feasibility, we're going to look at bumping up the mill to say 7 million and the heap up to say 5 million. So those numbers are going to change as we go through our feasibility study and do our trade-offs, but we're looking to upsize the project. Production, currently we're at about 109,000 ounces of gold and about 33 million pounds of copper a year over a 14-year mine life on average. With our feasibility study, we're looking at bumping up. We want to get closer to 150,000 ounces a year. That really puts the mine in a different category, and bump up our copper production to north of 20,000 tons of copper. So we're, mid-40s to 50,000 pounds of copper, million pounds of copper a year. Life of mine right now, 2.48 million ounces of silver. I'll throw the silver in because it's over $100 today. But 1.55 million ounces of gold, 213,000 tons of copper, and it's growing, as I say. So we expect the feasibility study to come out with higher annual average production and higher overall production. Here's our production profile. You can see we have a lull in here. One thing we'll look at in the feasibility study is this is when our mill kicks in. We'll look at bringing our mill forward to year 3, and with the increased production rate, we'll be traveling up in this rate on an equivalent basis, so north of 200,000 ounces a year on an equivalent basis. Costs, CapEx, pretty reasonable, under $400 million to build the heap leach and get it going. Sustaining capital, $580 million roughly. $350 million of that is for our mill. The way we've structured things, we build the heap leach, we get the cash flow going, we pay it off. Well, at current prices, we pay it off in about 4 or 5 months. We use cash flow from the mine to build the mill. So we have one capital raise, debt, probably a significant amount of debt to get the mine going, and then after that we're self-funding, and after a few years we're free cash flowing at current spot prices. Costs, we're pretty, our costs are typical for Nevada. Our heap leach processing costs are probably a little higher than you would see just because we're recovering copper as well as gold with the cyanide. So we're chewing up, it's probably about $6 higher a ton with the copper. Here I come. So here's what we're going to look at in the feasibility and enhancements. I've already spoken about this, really looking hard at how many tons can we get. Ken, standing at the back of the room right now, we're drilling at site, infill and expansion drilling. We're looking to up our resource, so we have more tons to deal with, more, and we'd like to push the grade a bit as well. And then we'll bring forward the sulfide production. That's where we bring the mill forward to smooth out that production profile I spoke to you about. And then finally, we've got a raft of other things we're going to be looking at to really improve the economics. Not that they're not good as it is, but you know, they can always be better. This is our resource. So roughly 2 million ounces of gold in all categories. And here's our copper, just under 900 million ounces, 900 million pounds, pardon me. So with our infill and expansion drilling, maybe not from this round, but we'd like to push this up to 3.5 million ounces of gold and get up north of 1 billion, 1.5 billion pounds of copper. There's the potentials on the property is there. The zones are all open. And here you can see the zones. We're about 2 million ounces of equivalent at Sullivan. Lucky Strike's our other big deposit. Carbody's pretty small, different type of deposit. Gold Ledge, we haven't really worked. So we've got lots of a potential. These zones all outcrop to surface. So we have not had the opportunity to really spend the time to evaluate for blind targets. So there's potential for blind targets. All of these zones are open. So as I say, the target is 3.5 million ounces of gold and another 1 billion, 1.5 billion pounds of copper. And there'll be some silver in there. It's not a big silver producer, but at $100 an ounce, it does contribute. These are our plans for this year and our targets. We've already filed our draft mining plan of operations. We expect to get our mining plan of operation issued by the Bureau of Land Management this year. Water, we're working on our water permit. This is dragged. We're going to start focusing more efforts on water, and we expect to get the water taken care of this quarter. Geotech drilling's underway. We'll get it completed this quarter. Infill and expansion drilling, it's going great. We'll be issuing, we'll probably have news out every 3-4 weeks with another batch of drill results right through May. Metallurgy's underway. We've got Dan Kappas in the room. His outfit's doing our feasibility study and our metallurgy, and it's coming along nicely. We'll get an updated mineral resource out this summer, and environmental studies going along. Feasibility, the target is the end of this year. So we're pushing hard on that, and we'll keep pushing. We'll keep you posted as we get through the year. This is what it looks like. Great place to build a mine. Lots of room for laydown during construction. Lots of room for heaps, a mill, everything you could want. This is a plan view of general arrangement, preliminary idea of what we're looking at to build. We're going to have a number of pits, as you can see, Sullivan, Lucky Strike, got Carbody, Gold Ledge in here, and here's our facilities. This is a start. It's going to be refined more as we get through the year. By the end of this year, we're going to have this pretty much laid out and nailed down. This is our path through for production. So currently, we're pushing hard to get through 2026, get our mining plan of operations completed, and get our feasibility study completed. We've started our environmental. All goes well. We tick the boxes right. We should get our environmental permits by the end of next year. If we do, we will be on site, mobed with construction crews, doing our ground, getting the civils going before the end of 2027. So before the end of 2027, we could be breaking ground, getting closer to production. And then we'll look at how can we compress that build and really move the schedule to the left. We want to be in production by the end of 2028. It may slip into 29, but we feel we are a really good shot of being in production by the end of 2028. This is our team. We've worked together for quite a long time, and we've been through a few rounds. We know what we're doing, and we like to push hard. Here's our capital structure. It's a little dated. We're up about 40 million in market cap. Management owns 16.5%, so we're well incentivized to focus on driving this company and really making it a success. And I think we're going to cut right there because I'm out of time. But thank you very much.